So who exactly makes stocks go up? Is it your Aunt Ethel buying 5 shares of Microsoft? Or is it you buying 50 or 100 or even 1,000? No. It's the institutions. It's the hedge funds, the mutual funds, the credit unions, etc., who buy sometimes millions of shares. And what do they look for? Well, of course, they look for the same thing as we do, in accelerating earnings growth, accelerating sales growth, increasing gross margin, less debt, more cash, etc. But they often look for, they're very fond of an additional facet. You see, more than a retail investor, an institution has a relationship with the stock. They spend weeks, if not months, researching these companies with teams of analysts and boots on the ground, tours of the company, etc. And when they make a decision to buy a stock, it's generally for weeks or months, sometimes years. They are unlike the average retail investor who can hold for that long, but we can just as easy sell our 10 shares with the click of a button 10 minutes later. Therefore, what the institutions really like to see is stability. Think about it. That's one of the best things in a relationship, right? Stability. So when we are looking for stocks that are potentially good long-term holds, one of the things we look for is a good stability rating. I'll show you how to find it on Market Surge. If you don't have Market Surge, I'm sure you could Google earning stability of X stock, or you might be able to pull it up in a different stock tracking software. By the way, this is Joe on Joe's Investment Express. Just a reminder, this is not investment advice. This is purely for education and entertainment. So let's take a look here. This is one of the best looking stocks in the market right now, in my opinion. General Dynamics, big aerospace and defense company. Technically, we won't get into it much here, but we've got a nice uptrend, nice looking base, trying to break out today. And if we jump in and look at the numbers, let me try that again. I was showing you the wrong chart. If we jump into General Dynamics and look at the numbers, what we see is some really stable earnings growth over the last 10 years or so. Annual earnings growth, $10 per share, $11.5, $12, 14.5, 16.5. Just nice stable acceleration of earnings growth. And if we look at sales here, +4, this is quarterly, +4, +5, +5, +10, +6, +8, +9, +18, +15. Certainly those aren't eye-popping by any means, but single-digit growth is good when you have a market cap of 83. But also what we don't see is their sales aren't all over the map, right? We don't see huge outliers in either direction, which gives it an earnings stability number of 3. You want a good earnings stability number is 20 or below, and this is a 3. This is a very stable, slower, mature, growing company, and in times of duress, in poor markets, whipsaw markets, and actually in good markets too, the institutions really like this type of stocks. These are sleep well at night stocks. They don't really have to worry about the upcoming earnings event because they aren't going to be worried about a big gap down on a surprise earnings crash, or having to deal with the complicated, albeit nice problem of dealing with a big gap up if their sales and earnings surprise hugely to the upside. Let me show you another example here. That's not it. Here's MasterCard. Really nice 20-year chart up and to the right here. And one of the reasons is because, well, first let me show you the 1-year chart. Got a nice prior uptrend, nice well-developed cup here with a couple. Here's a nice G area to get in early. Right up here at the lip line would be nice to see it build out a handle here. Anyway, one of the reasons that MasterCard has such a nice, steady, up and to the right 20-year chart is because of, yep, you guessed it, earnings stability. This has an earnings stability number of 11. Remember, under 20 is really good. And sure enough, if we look at the sales over the past, I don't know, few years, quarterly sales growth, plus 15, plus 12, plus 11, plus 14, plus 13, plus 13, plus 10, plus 11, plus 11, plus 13. That's nearly the same amount of sales growth every single quarter. And looking at earnings growth, annual earnings growth, 4.6, 6.5, 7.8, dipped down a little in 2020. Let's ignore that. 8.4, 10.6, 12.12, 14.3, just nice, stable annual earnings growth. And like I said, earnings stability of 11. So again, this is a stock. It's not going to 10x in a year, but mutual funds, institutions know that they can pile into this thing for multiple quarters and have a good have a good possibility of being able to stay in without any nasty surprises. Think how embarrassing it would be and perhaps fatal for your career if you bought, 10 million shares of a stock and then earnings were spectacularly lower than you anticipated. You would have to sell at a huge loss. You take a lot of heat. So I'm not saying never be in those high flying stocks, but I think a good portion of our portfolios should be in these companies with stable earnings. Now, just to not make a caveat necessarily, but show that there are exceptions, I want you to get excited when you see a stock that's in a nice uptrend that has nice earnings stability. That's something to get excited about. But don't rule out a stock because it has a high earnings stability number. Sometimes stocks make big surprises to the upside in their earnings, so the stock can do really well even with a high earnings stability number. For example, here's Progressive, which has had a great year here, nice prior uptrend, nice shallow base, big breakout, and is pretty much ignoring the sell-off right now. And if we look at its numbers, earnings stability of 99, that is the opposite of what I told you was good, right? An earnings stability number of 20 or below is good, but we have to remember that this number indicates the stableness of the earnings, and if earnings go way up suddenly, it'll spike that number as well. And you can see this is the earnings line on the graph here. You can see how it came way in 2022 and has spiked up. And if we look at the annual earnings, it went from $1 a share in 2022 to $6.50 in 2023, anticipated $12.50 2024. Huge jumps in annual earnings growth, and we see this quarterly too. Plus 845, plus 141, plus 425, plus 335. So what I'm saying is certainly don't exclude stocks if they have a high stability rating, if they are ticking other boxes like Progressive here. But when you see a nice pattern setting up like a cup with a potential handle here, a nice long-term chart, and you pull up the earnings stability and you see it's under 20, then that's a chance to get excited and maybe go heavier depending on how you're doing in the market and market conditions. And also, maybe this is a stock you can get in with and stay in for weeks or months or potentially years. It would have been not half bad to have stayed in MasterCard from 2006 to 2024, right? Going from a split adjusted, what is that? Split adjusted $4 to over 400. All right, that's the end of this video. I do have a Patreon service. There's a 7-day free trial. I show you the stocks I currently have in my portfolio. Here's Kava doing pretty well with this one. And I show you my focus list every week. And I do some midweek. I touch base with you guys midweek a couple times. Check that out in the description. And also, you might want to check out my sponsor, Seeking Alpha Premium, an amazing database for fundamental analysis, articles, and news items and transcripts, etc. Here's PGR, that stock we were just looking at. Hold, buy, and hold. We could read these articles and do some research. I'll see you guys in the next video. Let me know your thoughts and comments. As always, take care.